All right. Well, hello and welcome everybody to our store update call. This is Claudia Eifert here, currently from Germany, and I wish that everybody is going to mute themselves because we want to have a clear recording before we get started. And with me, of course, the founder and CEO of Utopian Global, Bill Rowell, and the CEO of STORH. And this call is really just about STORH. I know we have Americans coming on board here, which are actually not having, supposed to, not having actually, STORH couldn't get involved into STORH. So for you guys, there are going to come some updates about Utopian Global, not on this call. This call is just directed about STORH, the payments of STORH, so obviously Ryan is going to expand there further. We have very exciting news coming as well with Utopian Global, but this is going to be in a separate call and not tonight. So we want to keep it short. Bill, I'm going to give you the word that you then introduce Ryan. Looking forward to this call today.
Well, thank you, Claudia. Well, it's great to be here. It's some time since we've had a call, actually, considering that we've done calls primarily twice per month over the last probably decade. But during the last, I suppose, 6 months, primarily 2021, and with the COVID situation and lockdown, not being able to travel or move, it's really slowed many things down, unfortunately, with that. But it's great to be here and great to have people joining us from many different parts of the world. And most importantly, it's great to have Ryan Messer, the CEO of STORH, joining us as well.
How are you, Bill?
I'm great, Ryan. Whereabouts are you now? You're at the in LA, are you?
Yeah, I am in downtown Los Angeles, California at the moment. So I'll be here all week. I come out here now a couple of times a month for 4 or 5 days at a time, really to kind of manage what we're doing here and what we're building here, which is related to this call, of course.
Yes, because primarily the main part of the supply chain is California based, correct? And maybe you can continue from that.
Yeah, it is. It's the opportunity is based here because this is one of the largest markets, right? I mean, LA is it's a huge city, of course. So from a retail perspective, it's great. The main part of our business, of course, is on the wholesale side, wholesale distribution. But of course, that's the center of the hub. And so the core of the infrastructure that we're building is here in LA, but ultimately we'll connect all major cities in the United States. So that's the overall plan. But we're of course executing on LA first and proving the model can work. So anyway, that's kind of the basics.
Right. And so, yeah. So primarily the reason for this call, of course, Ryan, is that, our office, support office has been, obviously people have been asking about, the people who are not involved in the supply chain with you don't know how the operations work. So sometimes they get payments on the 3rd or the 7th. Sometimes they get payments at the end of the month. Sometimes they get payments at the beginning of the next month. So they want to understand why there's disruption or inconsistency in the times of payment. So we thought the best person to actually answer this is the person that's involved with the supply chain, yourself. So yeah, maybe you want to address that, Ryan.
Sure. So yeah, it's a really good question, and I can understand everyone's sort of frustration around the timing of things because in a lot of parts of business, things do happen on an absolute clock, right? Either the 1st, 31st, 15th of the month, and so you expect that kind of consistency. This is a slightly different business model. It has its own set of challenges, right? And one of the biggest challenges, of course, is banking, because a lot of the businesses or the predominantly cash, and cash is becoming tougher and tougher to deal with. And so in a lot of ways, you have to use intermediaries to bank the cash. You have to do it in different structures, and banks are becoming, I guess, less open to cash transactions because of KYC, AML, right? Because of anti-money laundering laws. And of course, the money can be tied to a business, so that takes time to sort of prove and manage. And so it's just becoming harder and harder. And so a lot of times the cash gets caught up or gets held when you're doing bank to bank transfers, because they want to validate where the source of funds came from. And so we have, a lot of our business is sort of managing that, and it's going to be a problem for a while until, banking laws change here in the United States. So anyway, that's sort of the biggest issue that we face from a timing of payments perspective. We also do run into situations where, we do have some receivables that are hanging out there that we're waiting to come in. So it's timing of receivables and banking issues sort of combined. But when we set the structure up, they are monthly payments. And so when you look at the returns, they're relatively consistent within, maybe $1,000 or so every single month, or at least they have been. And so the consistency there from a payment and return perspective is not really at risk. The risk is just a timing risk. So if, say, we're behind by 30 days on a payment, it's not like we lose that payment. It just, it's just going to fluctuate kind of from month to month. We may be early, we may be, 2 weeks late, we may be 30 days late, but that payment gets caught up because a lot of times, if we have a tremendous amount of receivables and then all that, of course, hits, then we're able to catch back up on the payments that are sitting in payables, which of course, one of which would be the ones to the investors here on the call and others that couldn't join. But good news is, everything is still in good shape. Our intent here with this program was to generate cash flow because, last year, just to kind of reiterate what happened, went through pretty significant change in the energy sector. And of course, most sectors were disrupted. And on top of the fact that we had to manage the bank note with Raccoon Bend, we decided to monetize the asset and redeploy the capital in something that could, of course, generate returns much sooner than Raccoon Bend could have. Because, if we were to have to pay off that bank note with the cash flow from Raccoon Bend, it would be another probably 2 to 3 years from now before you would have seen payment one from the asset. And of course, then it would be relatively consistent after that because the debt would be gone. But in this situation, we knew that we could generate cash flow quicker, redeploy the capital, at least put it to work. And that's what we wanted to do. And so we had to make a major pivot. And for us, it was worth the risk to do that. And so, I think our biggest job here is to just manage the risk, right? Protect the principal that is at work. And so we redeployed it in a way where we could call it. So if we decided we want the principal back before the payments were made and before the obligation was met, we could do that, but they could also call it as well. So that's still a potential that within the supply chain, they find lower cost of capital and they could replace our note, and then we would get the principal back and then we could redeploy it either within another part of the supply chain, another asset. So we have a lot of options here. And so I guess the reason for me sort of saying all this, and it may spark more questions, that's fine. But we are going to do a written update sort of after this call sometime this week when I can sit down and articulate it properly. But I just want people to understand and have sort of flexibility in their mind, right? Because I get it when you think a payment's coming on the 30th and then it doesn't come until the 5th or the 6th, people get worried. I totally appreciate that. I know you and Claudia and the rest of the Utopia Global team does as well, but you guys are the ones building the tickets. And so, and I'll sort of hate that for you, but at the same time, that's half the purpose of this call is to just let people, sort of put it in their minds to have some flexibility around what we're doing here, because we're kind of doing two things, right? Long-term, we have still kind of this STORH vision of sustainable energy technology on one side, which we're furthering and we're still working on kind of refining that business model. And on the other side, we're using the principal for the capital that was raised to generate some cash flow in the interim, okay, until we can redeploy it. So a lot of people think, once those 20-something payments were made, you would be completely out. That may or may not be the case, just depending on if the note gets called prior to that. If it gets called prior to that, then we're going to redeploy the capital in something else. So I just want everybody to remain slightly flexible through this process. And please reach out to me directly or file a ticket with Utopian Global. It's fine too. We're happy to respond. But does that answer the question effectively, Bill?
It does, and I'll just sort of I'll come back to sort of a layman's terms just to paint the picture a little bit. I suppose what you're really saying there, Ryan, is really that because we were forced, because of the bank situation of Raccoon Bend, they put you in a corner, and because of COVID situation, they wouldn't refinance the particular note. So you were, in one sense, you were forced to liquidate that to protect everyone's investment, including our own, of course. So we didn't default and lose any money on that. That money then, the debt was paid off with Raccoon Pen upon that sale. And of course, that money was redeployed into an asset in Los Angeles in the business retail sector business that you actually have. Actually, it's a wholesale retail supply chain business, which is fantastic. And it's been giving us very good yield. It's been paying out since the beginning of January. But in this last, really the last, I suppose, 6 weeks, 2 months, there's a bit of disruption to the consistency of payments. And what Ryan's been saying is that's for a number of reasons. One is we're in the wholesale retail sector where we're buying raw materials at wholesale price. It's been sold to retailers at a retail price or other wholesalers. And of course, sometimes when Ryan's speaking about receivables, okay, we've put out the raw material, people have bought the raw material, but they may not pay. He's speaking about where our investment is. These receivables may not be, they may not pay what they owe for the purchase of that for maybe 30, 60, 90 days, sometimes 120 days. You end up chasing people for their money. And of course, between the disruption on the supply chain of everything that's going on in the world right now, and on top of that, waiting for other people's money to come in for the investment so we can pay out to the members, including ourselves, that's where it causes quite a bit of a headache, Ryan, and that's where we need a bit of flexibility on the payments. I get that because I've been in business since the 80s. The other part to that, of course, you mentioned banking at the very beginning, and now I've been in international banking for a long time now. And because it's a cash business that you're involved in, giving strong yields, it's been paying out to members around the world. Well, pushing money from the US dollars from the US to Switzerland is not always an easy thing to do. And I know even that in some of the fees that have been taken by these third-party payments, it's cost sometimes thousands of dollars, and I mean literally thousands of dollars, just for us to take US dollars into US and get that pushed to Switzerland. So therefore we can actually push it from Utopian Global to all of the members. We literally lose sometimes in bank fees, and we have no control over it. That's the only way we can get money. And so that's always a bit of a challenging as well with these international bank charges. So between the disruption on the supply chain and international banking, this is where we actually get, of course, variables in times. And but the good thing is we have something solid here, right? You're managing. You're the CEO of the company. You're running the company there in one sense. So you see exactly what's going on, and we look forward to receiving more updates as we move forward. Of course, these payments will come out. You're anticipating, so for the April yield, you're anticipating around the 14th, 15th of this month. Is this correct?
Yes, we've got a hold with a bank here on several $100,000. We've probably got about $800,000-900,000 just like held up, receivables just in banking issues right now. One of them that will be resolved by the 14th will fix up our April payment. So and then we should only be, I think at that point, roughly 15 days behind on the May one, and so it'll follow that. So I think what we're doing, and we're recapping the company too. So there is we do have like a private equity firm that's come in and committed millions of dollars to what we're doing, which has put a significant value on the company, which is great. It's going to help clean up some of the debt, and it's going to free up some cash flow to help us manage these cash flow crunches, if you will, these periods of time when the payments are due, but we can't necessarily put our hands on the cash, but it's out there. So again, we just got to remain flexible, but I think the next payment will be sometime around the middle of the month.
Okay, well, that's great news, Ryan. The most important thing is that, that's what people want to hear, and they want to understand why there's an inconsistency in the timing, which I think you've explained pretty well. So that's all I have. Claudia, do you have any questions from yourself?
Yeah, well, of course, there's a lot of questions coming in, especially also from countries where they don't speak English as their first language. So for them, it's always a little bit harder to really grasp the concept. We have a lot of people, obviously, they have never been in business by themselves, and they sort of, all this high vocabulary is a little bit too much, of course. They don't really understand it. And basically, they always, one of those questions is always, well, keep it simple, plain and easy. What does it mean for me? What does it mean for my pocket? And so that's really one of the things which is always coming, like, make it, when do I get paid? So why I not get paid? Why I'm not getting paid in, of course, at the time on the 14th, when we, of course, said we intend, or STORH, of course, intends to pay. So that's it basically from me. Adair?
Well, I think Ryan answered that pretty clearly. Actually, it's just the nature of the business that we're in with the supply chain. The payments will come. What Ryan's really asking for is flexibility on those particular timings between of course, the supply chain interruptions between the wholesaling and retailers, and then the other part, which is a really important part, of course, is waiting for the money to come back from the people who buy the raw materials back to the company, so that could be put in the banking and pushed to us in Switzerland, so therefore we can pay out all our members. So this all takes time. So we're expecting the April 1 around, let's not be specific, the 14th or 15th. Okay, this is what Ryan's asking for, a bit of breathing space here. We're expecting the bank to release these funds maybe in the middle of this particular month, Ryan said, and that will cover the April payment, and that puts us about 14 days behind the May payment. So by the end of the month, we should be pretty much caught up on the May payment as well, which would be fantastic and get things back into alignment. And then we look forward to having probably more updates from STORH. I mean, it's been a pretty challenging 18 months. We have lots of great things coming out, of course, but being not able to travel and do business has also been very, very, very difficult. So I appreciate that you left your home and gone to Los Angeles, Ryan, to be running this and making sure everything's in order. So thank you.
Absolutely, yeah. And again, further questions, happy to answer. We're gonna put all this in a detailed written update, and probably go into some more detail on maybe what the future would look like and opportunities for continuing to add value to this program that we've undertaken here. So yeah, just give me a little bit of time to put that together, and we'll make sure it gets out, and we can communicate that to all the various groups, and get it translated for all the folks in other countries, non-English speaking. So
yeah, and then of course there is always the question regarding the polystream, which we are not gonna talk about on this call, because this was really not for that. And I believe you're gonna eventually give some further updates on that. Correct?
Yes, I will. Yes, that I think I'll incorporate some of that in this subsequent update, the written update.
Yeah, that is great, because there's of course always people asking, and and as well, obviously regarding the plastic, the plastic to fill, which of course is something which a lot of people are very much, of course, intrigued in. How can we further develop that? So, but you're going to give this update in a future, of course, communication. Yes,
I will. Yeah, absolutely. And so hopefully we cover the main points. And again, just want to reiterate that when a payment's late, it's not like the payment goes away. It just it's not like we're losing a payment. It's just delayed from a timing perspective. So I think that's one of we had a few questions on that, like, oh, is the payment gone? No, it's just the same payments just sort of stack up until we get caught up on the timing of those. But yeah, I hope that's it. I appreciate you guys having me on, and hopefully it's helpful, and happy to engage in any conversations or give any more details as needed.
Yeah, thank you so much, Ryan.
Thanks so much, Ryan. Thanks, Claudia.
Yeah, that was great. And of course, for all the people here on the call, we have recorded that. So you're going to get a recording of that if you wish to listen to it again. And of course, lots of people came in late or couldn't even attend that. We have been silently, obviously, working in the background here for, our new launches. We're going to very, very, very soon talk a little bit about that in another call, not this one. So we haven't been, well, we have been on not quite be on purpose, but there's certainly some really, really great things going to come out, which we are excited. I'm really excited. But again, it's just a little bit too early still to give you the exact update on that, but it's going to come soon, and then we're going to get started again those information calls for all of you guys. So that's really now starting soon again, as things are getting better, at least here in Europe, with this whole lockdown situation, which was pretty crazy. But yeah, so with that, Bill, I'm going to hand it over to you to say the closing words. And again, Ryan, thank you, Bill, and thank you all your listeners to come on the board today.
Well, thanks, Claudia, and thank you, Ryan, so much. I mean, yeah, it's been a pretty challenging 18 months, but we're here. The great thing is we have ownership of real assets. That's the key thing, managed by a real team. I mean, I've been doing business with Ryan since 2004, when I first met him in the US at an oil and gas asset in where was it? Not Raccoon Bend, in
Louisiana.
Louisiana. What's the name of the little town there on the river, Mississippi River? I'm just trying to think of it.
Well, it's Natchez, Mississippi, which is right on the Mississippi River, which borders Louisiana there, where most of our production and development was during that time.
So, you know, for the point, the reason I'm saying that is because I know a lot of people there, if they're not getting their payout on time, they think, oh, these people are going to run away with our money. We're not going to run away with anyone's money. Okay, we've been in business for a very, very long time, and we wish business is always, you know, you can always go the route that you want to take, but sometimes you face storms. You've got to be able to navigate those storms. But our destination, as Ryan said very clearly, our destination has not changed. We know the destination. We know where we're going. And we need to navigate around these storms that we've been facing the last 18 months as well. The good thing is that we own something of real assets, and we'll get these payments back into order. And we look forward to the updates from STORH, from Ryan, regarding the Polystream. Maybe it's Polystream, maybe it's another technology which is even better than Polystream. I know that you're doing a lot of due diligence research in different companies and opportunities, as we are as well at Utopian Global. So things are in the works, but you know, you just can't move around. You can't meet companies, you can't go places, or they don't want to even meet you because they're so scared of this COVID thing. So, but hopefully we'll get beyond this over the next months and get some normality back to the world, and we'll keep bringing great opportunities to our people around the world. So I want to thank you for being on the call. Thank you for your time, Ryan and Claudia, and thanks most importantly for our members for their support and loyalty over the many years. I mean, this is our 13th year actually, and we all have skin in the game here. So we're all in the same situation. We're all in partnerships here in one sense. So we want to make sure that this is a win-win situation, and that's what we focus on. So thanks, Ryan. Thanks, Claudia, and blessings to everyone. Stay safe and well.
Thanks to you all. Appreciate it.
Thank you.
Talk soon.